a guest on the show, Dhiraj Singh, who's the CEO of SIS. So welcome to ET Now. Largely SIS has reported a mixed set of numbers coming as per the analyst estimates, and inline performance when it comes to the revenue for security solutions and cash management business. But it seems that there has been a dip in the revenue margins in the international operations security solutions. What may be the reason for this?
Overall, the group did record a 6% year-on-year on the revenue side. But more importantly, we've been focusing on the margin. So our EBITDA has grown by 20% year-on-year. And this has been the fifth consecutive quarter of EBITDA percentage increase. So as a group, we made 4.9%, which previous quarter was 4.7%. And year-on-year basis, earlier it was 4.4%. Security business in India has now reached pre-COVID margin levels of 6.1%. Just a year ago, quarter-on-quarter basis, it was about 4.9%. So we've seen significant improvement in the margin, which has been our focus area. International business has lost a large contract in Australian Post, which has temporarily dipped the numbers in Australia. But Henderson in Singapore, if you see the numbers, they have turned around from this quarter.
Hi, good afternoon, Mr. Dhiraj. This is Shrishti also joining in. Talking on the numbers itself, the EBITDA margins of the security solutions for the India segment are back to the pre-COVID levels. But what is the outlook on the margin front specifically going ahead? Now, are you looking for this business and the overall consolidated business margins inching upwards from these levels?
We've maintained always that we should get back to the pre-COVID level within FY25. In security business, which is our main business, the foundation, we've already reached that level. We've crossed the 6%. And we are seeing improvements even in the facility management side, where it's gone from 4 to 4.3% on a quarter-on-quarter basis. Our cash business obviously continues to deliver very high EBITDA margins. This quarter, it was about 16.6%. International business, we've always said, will be in the 4 to 5%. So as a group level, we will continue to be in that 5.5 to 6.25% for the next year.
Mr. Singh, already the security contract has been received for Ayodhya. Do you expect or a bidding for new areas as spiritual tourism gathers space in India? And how big is this market size and total addressable market share for this?
You're absolutely right. Religious tourism is going to be one of the biggest economy drivers in the times to come. In India, there are about 7 lakh temples. We currently have our security or facility management in about 45 of them. Not all of them will require our services, the 7 lakhs, but a large number of them would require. So it's a large market to address. And the needs in these religious gatherings are becoming more and more sophisticated. And SIS as a group, we have that platform. So even in Ayodhya, while our manpower was in moderate numbers, but we had more than 1,200 cameras through our sister company, Statue, where we were doing all the video analytics. We were able to identify more than 25 lakhs people with criminal antecedents. We could identify them in that crowd. Or even needs like if somebody was lost and not being able to find, we were able to do that immediately. So that Kumbh Kamila situation is no longer applicable. And we expect that to continue in the future. And as these religious gatherings increase, both in numbers and in number of places, we should be able to address that.
All right, but Mr. Singh, with general elections coming up, how are the demand trends looking like for the security solutions and for the India business specifically? And have the queries picked up and also in which segment, if yes?
We are continuing to see, this quarter in security, we added more than 18 crores per month. So new sectors, whether it's in energy, mining, they are bouncing back strongly. The healthcare continues to be a strong demand. Retail is bouncing back. BFSI continues to be strong. So I think from all segments that we operate in, we are seeing good demand going forward.
Right. Mr. Singh, regarding your ATM cash and maintenance services, as per the industry reports, new fresh cycle of ATM machine replacement and expansion is expected to be undertaken over the next 12 to 18 months. What kind of earnings potential can one expect from this event?
So for the cash business, we have reoriented it more as a solutions business for all banking outsourcing solution services. ATM continues to be an important part of our business, but we brought it down to about 20% only of our business. Going forward with further cluster consolidation density, as well as adherence to RBI compliance guidelines, we expect the margins to continue to improve in the ATM, and we'll build on that. However, our focus remains on other value-added services and banking solutions.
All right, Mr. Singh, with this, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with the growth outlook for the company in the times ahead.